Hello traders, Gary Wagner for Trending Markets, about 1040 in Honolulu, 440 in New York. Wednesday, October the 7th, 2015. Dow Jones Industrial Average continues to climb, extending an exceptional rally that we have seen in this market that really began at around 16,000 on the Dow Jones Industrial Average. That's right in here. We actually identified a three-river morning star that really signaled that bottom. On the S&P, we did get a confirming candle. Of course, we did not get one in the Dow Jones Industrial because the following day that market, in essence, closed unchanged. But over the last 4 trading days, it's been up, up, and away. And as we talked about, we really wanted to test this particular price point where the shooting star came in. You can see that both in the Dow Jones Industrial Average as well as the Standard & Poor's. Dow Jones closing up 122 points. To close about 0.75% higher on the day, just below 17,000 at 16,912. Now, we talked about the fact yesterday that I wanted to begin to layer in positions. Traders taking that suggestion would have gotten long and would have been long really at the close right here, which came in roughly at 1971, market at 1987. Nice rise in the market, but more importantly than that, we'll pull this up. What we can see is we are now within, this high is now over the body of the shooting star, and that to me is extremely bullish on a technical basis. I'm talking about this shooting star right in here and the body that comes in. In other words, the relationship from where the market opened to where the market closed on that week. We can also see that when we look at this three-river morning star, we did get a confirmation. Now, I was a little hesitant to take that call because I didn't want to see this market run into the resistance area that we had roughly at about 1950, so I didn't put out the trade recommendation to begin to layer in till yesterday. And as I said yesterday, I want this particular position to be put on in 2 parts, because even if this market continues to track higher, we do have resistance roughly at that 2,000 point. So we want to be sensitive. In other words, we're in right now roughly at 1971. Market's trading at 87. If it continues to rally and finds some sort of resistance in this area, that's when we would look to pull some sort of profit out of the market. But if we break through the 2,000 area, which I believe it will, it's a matter of if it will do it on this rally and just kind of go straight through, or if we'll see something like our rally, a small retracement, maybe even back to 66, and then a continuation of the rally. We want to put on a second leg of this trade, really when the market hits about 2,000 on the Standard & Poor's. So maintain current long positions in the S&P and look to add to this particular trade if it gets above 2,000. Now, we talked about stops, and we talked about the fact that the only way this stop actually makes sense is it has to really be below this particular low of the market. Now, we can consider trailing that up. The S&Ps trade with extreme volatility when they move, and so I don't want to be whipped out on an intraday basis just because of the move, but at the same time, we want to protect equity. If we continue to see this market rise, we'll look to move it under today's low in a couple of days. Lastly, we talked about crude light, and on crude light, we did have this market trading lower. Now, it's still above 48, and so traders taking that call yesterday, we talked about getting in. You're in at roughly 48.57. 48.57, of course, was the close of yesterday's. We also talked about the fact that in terms of any kind of stop, it's got to be below this particular point, which was roughly and is 45.72. So maintain your current long, which is, as I say, just over this particular price point by about 50 cents, or the move that we've seen today, this 1% drawdown in crude light. The fact that it is still trading above 48 to me, even with this drawdown, still makes me believe that we've got really good support in this particular area. We've got this top here that it's matching against, and my sense is what we really want to see is it form some sort of base at 48 and then to begin to trade and move higher off of that. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review in trending markets. Bye-bye.